Fiscal conservatism in the US likely implies greater monetary activism or lower rates, with the opposite true in Europe. And implications for the dollar, therefore, to us at least, are clear.
Welcome to the long and short of the week ahead, a production of Eurizon SLJ Capital that takes a look at the macroeconomic themes of the week ahead and has been recorded for professional investors. My name is Matt Jones, Head of Distribution for Eurizon SLJ Capital, and I'm joined today by Neil Staines, Senior Portfolio Manager. Welcome back, Neil. It's great to have you here with us.
Thanks very much, Matt. It's great to be here.
So it's been yet another complex week for financial markets, with ongoing global trade uncertainty at the fore. However, in many respects, it was Europe and perhaps more specifically Germany driving the macro environment this week. So how are we thinking about Europe looking into next week?
Yeah, thanks very much, Matt. It's been a complex week indeed. A huge week for Europe as Germany, the long-time anchor of fiscal conservatism within the Eurozone, announced its intention for huge fiscal expansion. Expectations ahead of the German elections were for some changes to the debt brake, but this is of a different magnitude. The surprise announcement from Merz came with 500 billion euros SPV for infrastructure investment, exemption to the debt brake for defence spending above 1% of GDP, and the introduction of local government borrowing. Material implications for Germany, for European and for global markets. Now, we expand on this a little bit more in this week's blog, but Germany's whatever it takes moment, hot on the heels of Commission head von der Leyen's announcement of Rearm Europe defence plan, are very significant events through the course of this week. The market reaction so far has been to take euro dollar higher, German equities higher, and European yields significantly higher. Now, against a backdrop where global asset allocators are reconsidering US exposures and hedge ratios in relation to the questioning of US exceptionalism, this really is a very significant development. Next week likely brings an attempt to ratify the changes to the constitution that are required in Germany for all three of these measures before the newly elected MPs take their seats and the parliamentary maths becomes more complicated. Now, we see this as a bad and potentially risky precedent going forward, but ultimately that seems to be the direction of travel. Now, the ECB also this week was a halfway house between a recessionary growth outlook pre-fiscal change and an upgraded growth and inflation projections ahead. Commentary from Lagarde and Bundesbank Nagel next week will also be closely watched as we reassess the situation across the Eurozone. Overall, it's a regime shift in Germany that likely has broad and long-lasting connotations for Europe, for the euro, European assets next week and also beyond.
Now, we've also had some positive developments in terms of stimulus from China's NPC and the key focus of the two sessions. So how are we looking at China and the global economy more broadly into next week?
Yeah, thanks very much, Matt. Again, very significant developments in China over recent days. While sentiment is complicated by the special attention the US appears to be paying to China in terms of tariff policy, China's stimulus is very notable. A recommitment to the 5% growth target, a higher deficit, a lower but likely more strongly enforced inflation target, and increasing special bond issuance all complement China's desire to stimulate demand and increase consumer confidence. Next week, we get CPI and PPI at the start of the week, and that will be important and watched very closely in terms of its role as a barometer of current domestic demand. One other important factor is the RMB, or Chinese yuan. Now, markets have long been near unanimously of the view that dollar China trades significantly higher as a function of the US tariff policy and indeed of US exceptionalism. Now, recent dollar declines exacerbated by German stimulus and indirectly via China stimulus likely weigh on that dollar China in our view, and we maintain our out of consensus view that the CNY outperforms relative to the US dollar. Indeed, we reiterate our core view of dollar weakness more broadly, with euro a key driver this week. So next week, we will be watching for official rhetoric, trade announcements, and the inflation data from China, but also very closely for the dollar in particular against the RMB.
Now, finally, it would be remiss of us to leave out the US, of course, from our weekly catch-up, but we are ahead of the payrolls, which will be later on this afternoon. Within that context, how are we thinking about the US next week?
Absolutely, remiss indeed. The US, in terms of rates, the dollar, and of course trade policy, not to mention fiscal developments, will continue to be a key focus, or the key focus for financial markets. Now, having witnessed the significant impact of the proposed fiscal expansion in Germany this week, we continue to view the likely fiscal trajectory of the US as being less expansionary, if not entirely contractionary. Again, this is a very counter-consensus view. And this likely has significant implications for relative monetary policy trajectories. Again, a topic that we touch on in this week's blog. Essentially, fiscal conservatism in the US likely implies greater monetary activism or lower rates, with the opposite true in Europe. And implications for the dollar, therefore, to us at least, are clear. Now, after this afternoon's payrolls, and without forecasting the figure, we maintain our negative view on payroll gains over coming months, at least on the basis of a halt to direct and indirect government hiring, a point that we've made and several times on blog and here. Now, we get CPI and PPI next week, and they're both going to be a policy relevant focus, and the market's going to be watching those very closely, particularly given what we're seeing in the backdrop for the dollar. Now, adding all this together, we see a dovish asymmetry to Fed policy going forward, governed by the data in terms of pace, but we continue to see disinflation and growth moderation as the dominant macro themes. And of course, we will continue to watch for tariff and trade headlines. So it's going to continue to be another big week for the dollar, another big week for the US, and another big week for global financial markets in general.
Fantastic. Thank you, Neil. Another big week ahead indeed. In which case, as a lifelong Welsh rugby fan, unfortunately there's no time for sport this weekend. Only joking. What are you going to have your eye on?
Absolutely, another big weekend for sport. After an interesting week of European action, we get another full Premiership schedule. Forest versus City, Manchester United, Arsenal, and West Ham versus Newcastle on Monday night, the pick of the bunch. In cricket, India versus New Zealand in the final of the ICC Champions Trophy on Sunday from Dubai. That is likely to be a thrilling match there. Thursday sees the start of the Players' Championship Golf, an unofficial start to the calendar year for golf. But for me, it's all about the rugby. A huge game on Saturday lunchtime, Ireland versus France for the title, essentially, although a France win would also give England an albeit faint glimmer of hope. England versus Italy and Scotland versus Wales, the other games of the weekend, so some thrilling action there. Now, there was a big surprise from German government this week, and I, for one, will be hoping this follows on into the weekend's rugby action.
We can but hope. Thank you for joining us and for outlining your thoughts on the week ahead. I look forward to catching up with you again next time.
Thanks very much, Matt. It's been a pleasure.
Thank you for joining us for the long and short of the week ahead. Further insights are available on our website, Eurizon SLJ Capital.com. We look forward to you joining us again next week for more insights into macroeconomic events and the long and short of the week ahead. Information, data and views were accurate as at the time of recording. The views expressed by presenters are their own and do not necessarily reflect those of Eurizon SLJ Capital, Eurizon Capital, or the Intesa Sanpaolo Group. The information and opinions contained in this recording are for information purposes only and do not purport to be full or complete. The recording is directed at professional investors only and is not intended for and should not be relied upon by other investors. The information in this recording does not constitute an offer to buy, sell, or the solicitation of any offer to buy or sell securities or any derivatives.